Nicole, the packaged food group has been an unloved group this year, even though it's a defensive sector. What's going on here?
I think we've seen, especially recently, a lot of people switching over to high beta names, trying to catch that cyclical trade. There's still a lot of uncertainty in the market, but the packaged food group has been a little bit boring for people. I think when people are looking defensive, they're looking to other categories. They've looked to healthcare, for example, because the packaged food group has also had a lot of worries about input costs. That's been really dragging down the sector from an investor standpoint.
You mentioned input costs. Grains, for one, has been on the rise earlier this year, and that's supposed to impact these companies going forward. What's the outlook on that going to look like?
Yeah, I mean, grain costs in particular are interesting here because we recently heard from ConAgra and General Mills, and they had surprisingly good quarters. So one thing that we looked at Mad Money, given those two companies' reports, was, well, what does this mean for the rest of the group and for some of the other underperformers? ConAgra in particular reduced its cost outlook from 4 to 6% to 3%. And General Mills also had some positive commentary on costs. So while this has been a concern, it's largely priced in, it's largely expected. We're seeing these names revise their expectations downward, and that's really positive for the group going into the fourth quarter.
Now, you mentioned a couple names there, but you didn't mention Kellogg, which is one name that you and Jim Cramer have looked at on Mad Money. What are you seeing in that stock?
Yeah, Kellogg is an interesting one because it hasn't reported yet. So we always, and this is actually really important to remember at the start of earnings season, to look at other names as read-throughs. General Mills talked about market share loss in cereal. That could be Kellogg. ConAgra and General Mills, like we just talked about, mentioned reduced input costs, also good for Kellogg. Kellogg has been an unloved name along with the group going into its quarter. It's interesting right here. It's a turnaround. It's once again focusing on innovation, and we like it here. We recommend it on Mad Money.
But since it's July low, it's up 11 or 12%. So
yeah.
Do you still recommend it at these levels?
Yeah, it's interesting here. It has yield. It isn't up as much as other groups. Like we said, this category has lagged. And we have the commodity headwinds kind of lessening a little bit. The Pringles acquisition updates, more innovation. I think going into the year, Kellogg is well positioned. It hasn't been managed very well over the last couple of years, but it's trying to turn itself around. It has run of late, like you mentioned, but going into its quarter, I would buy on any pullbacks, and it's a good position to have to diversify your portfolio from some of the more cyclical names.